There's no second best. By becoming rich. Take all your money, buy Bitcoin.
I say when we sell.
Wake up every morning and say GM.
GM. Today is Thursday, the 15th of August. And let's look at daily levels. So, not looking at NASDAQ. I must have been there from last night. Let's look at BTC. So, on the 1 hour chart, we had quite a sell-off yesterday. If you think back to yesterday's daily levels and trade of the day, I was talking about pretty much exactly this. That we had a good PPI, the first inflation number, on Tuesday. Tuesday, yeah. And then we pumped up into the highs. And then everyone was expecting, or at least the market got a little bit too far onto the other side, long, expecting CPI to come in good. Even though it did come in good, slight decrease in inflation rate, we still sold off. Why? Simple positioning. Market too long, not enough demand when it pushes higher, sells off. Now, it just came right back, right back down into this area, and we're at the pivot. So I need to find my chart that has all the drawings. And here we are now, back down inside of, this is the week value area for this current week. But you can see we're holding at the value area low. We're holding at this red zone, which is marked out, which basically is just the Feb 21 pivot, down as low as 58 and wicks slightly below it. So it looks like shit, but it's holding for now. So it's one of those areas where it's easy to not even trick yourself, because looking at it correctly, you would say, yes, this is exactly what you would expect the market to look like in this phase. So it's not that it's wrong to see it like this and think that the market is going to go down, but you do have a pretty strong support level, at least a support level on the interim basis over here right now. And so I think today upside is more likely than downside, just purely by virtue of the fact that we oversold on the low time frame down into this area here, down into some kind of support. We probably could see a rally at least towards the highs of this previous distribution where it started, maybe up into the gap, but maybe not. I wouldn't be surprised to see it just at least make its way up to there. And if it fails at the value area high, or even fails at the point of control, maybe we see price go lower. But in terms of a further breakdown, I would be patient on it. It is a distributing chart. I've said this all along, right? This is why I didn't buy my coins back. And I've said it a bunch of times that I fully expect Bitcoin to go all the way back down, maybe even go to new lows, but at least go back down for some kind of retest. So, I'm the first person to say this can and should go down, but not necessarily right away. Right, when you move up into these areas, you've got a high, you've got a low, you've got a retest, you've got another one. It can easily continue to chop around here, even if it's bearish. Especially if it's bearish, right? Look at these, the eventual distributions. What happens? Every time it drops back, it bounces. Big sell-off, it bounces. And it doesn't just bounce, it makes new highs, right? And then eventually it rolls over and falls all the way. So like if you're saying, are we at this point here, where we were here? Is this it now? Is this just the sell-off? Well, if so, you need to wait for structures to actually break. Now, you're sort of back at these kind of equal lows, and it's only the first time revisiting them. So I would be much more looking for some kind of a breakthrough to the downside. Really, 58k needs to get lost, and then retest bearish, and then you're looking 53. I think that range is pretty clear at this point, and is somewhere we can trade through if the time comes. Now, there were some absolutely great trades yesterday. I was in day trader chat all day with the G's over there, which is a chat you need to be a blue belt to unlock. And we traded the news, traded the CPI, got a nice short, rode it all the way down, closed it near the lows, and since then prices just continued to slide and grind lower. I don't know if there's going to necessarily be anything today that is worth trading or spiking volatility into the market. I know there is some economic data, retail sales, which is going to have more impact than normal because the market has now got this, slight fear of a recession on its mind. But look, at the end of the day, market's telling you something. Compare Bitcoin to stocks. Bitcoin, and then we look at NASDAQ. Right, if I actually go to 1 hour, you can see this more clearly. So, both moved up in their respective recoveries. Both moved up from the same area at the lows into new highs. Bitcoin went well ahead. Then the NASDAQ catches up. Bitcoin sliding the other way. And yesterday especially, whenever the inflation CPI came out, Bitcoin straight down, NASDAQ flushed down but rallied and closed near the highs. Look at gold. Gold is now pulling back, and Bitcoin has followed much more the gold path yesterday. Sold off and stayed down. And that's mostly just because gold's doing the same thing. When I start to see the gold charts all over my Twitter feed again, I know that it's about to fuck everyone over. It's probably going to be a false breakout here. The next time it breaks out, it's not going to hold. Just because so many people. I expect it to do this again. Tries to break out, drops back. Because everyone's now looking at it, oh my god, look how strong this is. Look at this compression at the highs. It's going to break out and never come back. Probably not. Probably first there'll be a quick grab and a sell-off. We've had one there. We've had one here. Maybe it's done enough to just break out, but I am not bullish gold here. It's just far too consensus to be bullish on this at this point. It's when you don't trade it, which I don't. When you don't trade gold or whatever, it's easy to forget. Guys, gold is a super crowded trading market of its own. There are people who trade gold all the time. There are retail people all the way up to fucking, hedge fund, institutions, governments, everything. But if you're talking about the lower time frame trading, trying to catch these breakouts, there's just as many TradFi retail trying to catch this as there is Bitcoin. So you wouldn't blindly buy a Bitcoin breakout. At least I hope you wouldn't. And you shouldn't either for gold, right? Take you back over here and we look at Bitcoin. Doesn't have bar replay. But it's similar, right? It's very, very, very similar to over here, where Bitcoin had this really nice setup, right? Compressing and consolidating. You're like, oh, this is great. It's holding up. Higher highs, higher lows, higher highs. Breaks out. Obviously around the ETF, but it doesn't matter what the catalyst is. Breaks out, flushes all the way back down. Takes out some of that positioning. I'd fully expect that on gold, right? Where it takes out the highs, comes down, takes out the lows. And if it is bullish, reaccumulates from there. And if not, you've got gaps all the way to 2K on gold, which can fill, although that will be retracing most of 2024's move, which we'll see. That would probably be unlikely if the governments and central banks are going to print more, but not impossible. But for sure, the first stage or first step I'd be looking at would be gold to come back down into at least sweeping out these lows. Or I guess not at least. I'd say that at least it should go back down into this support, right? Somewhere in there, or taking those lows. Now, of course, I'm not a gold trader, so why am I saying this? Why the fuck is this daily gold levels? What's that about? Well, go back, look at Bitcoin, how it performed yesterday, not following stocks, following almost perfectly gold. Gold sweeps the highs, deep sell-off. Bitcoin sweeps the highs, deep sell-off. So Bitcoin and gold's correlation is a real thing. Bitcoin sort of is, I guess, a chameleon like that. It can change, adapt to whatever fucking correlation it wants. Does it want to behave like tech stocks? Does it want to behave like gold? Does it want to behave like whatever, interest rate? So if gold did that, if gold failed to break out, and if gold then had a pullback back into, back to its June lows or its April lows, end of April, early May, into June, well, where was Bitcoin at the end of April going into May? It was around these lows here. And in June, sort of looking here, Bitcoin was on the slide. As gold was down at its lows, Bitcoin was having its big sell-off. And so relatively, Bitcoin is so much weaker than gold. I mean, gold is, obviously there's correlations on lower timers, but look at, they are moving in opposite directions. Gold's making higher highs and higher lows in its compression. Bitcoin's making lower highs and lower lows in its. Again, just call a spade a spade. It's not strength. And it's like, on this time frame, like in this current phase, Bitcoin is not showing strength against gold or against anything really. And I was chatting about this last night a little bit in trading chat. The problem is that most people are just now trying to find a catalyst for Bitcoin. You have to just let it happen. I don't know how many times, that you can see what happens with BTC before just realizing the only way to play it, right? So if you're trying to find catalysts, you can always find one. But the problem is when it's up significantly and everyone's talking about this third leg, it's just this sense of certainty that I remember from 2021. Like certainty was all over that this had to be. There had to be a third leg here. Do you know how many legs there was in the 2021 bull market? 2, right? From this breakout, all consolidation, right? No trend there. Then you have leg 1, boom, and then pull back, leg 2, boom, and then everyone was calling this. It was like just, all right, straight away, we need to go. Leg 3, right? You have to have a third leg. And then it went down here. And as it rallied back up, that's what gave everyone so much certainty. Like, oh, here, now this is leg 3. It was just a protracted sell-off. And there was no leg 3. So this, get the idea out of your head about legs. There doesn't have to be any number of legs. It's a fucking $1.4 trillion asset. It's going to move whatever way it's going to move. And that's also not to say that there can't be. There could be. Right? But catalysts. Bitcoin's entire move led by COVID money printing, right? Second leg, the catalyst was the Bitcoin futures ETFs, which launched at the top. Catalyst for the top was the Fed coming out and saying, party's over. We're going to raise interest rates. We're going to stop printing money. Catalyst for the bottom, 2 of them. Luna collapse, number 1, which did form the bottom, and then FTX collapse, which kind of put the end on it just. But it was that general area. Now, catalysts for bottoms, obviously, can take longer to play out because people get left liquidated, taken out of the market. They don't have any money. It takes a while. Slow reaccumulation begins, all that kind of stuff. But on the way up, catalyst, March 23. Banking crisis, Fed comes out, supports the markets. ETFs, breakout, ETF trade begins. ETF after the sell-off, again. So this was the ETF trade before the ETF. That was the catalyst. Then post ETF launch, we had the real flows. And now we're waiting for a catalyst. People are like, well, like the Fed, like the Treasury are going to run down the TGA. So this is like something Arthur Hayes talks a lot about, and most people talk about it. And I've talked about it in the past about watching the reverse repo, the RRP, which has drained down from 2.3 trillion to 300 billion. So it's drained by 2 trillion in the past year and a half, which has been a massive boost to asset prices. But that's 2 trillion, that's gone. Right, it's already happened. And people are looking at, the Treasury, the TGA has about 750 billion. That's going to drain all the way down, and that's going to be the next big thing. I was like, well, 2 trillion moved us like here, right? 2 trillion did all this, but it didn't. It wasn't just that. It was 2 trillion plus ETF catalyst, plus the actual ETF flows. So an 800 billion from here is genuinely not going to do much, because that 800 billion does not go into Bitcoin. That's the US Treasury general account. If that money comes out, it goes into the economy. It does not go into Bitcoin directly. It's an indirect effect that it has on stock markets, risk assets, and of course crypto, yeah. But it's not it's not money printing, right? It's money they have It's money they've taken in through tax receipts or whatever. It's not new money. So that's not a big catalyst. And people saying it is are just talking their bags. They're just looking for a reason. And again, if you look back, and I like, people like Arthur Hayes. I like him. I think he's smart. I think he's an OG. He created perpetual futures. He literally invented them. But go and read his last 12 articles. It's usually once a month. So read the last 12 months of articles. And how many times there have been, do this, do that, look at this, look at this, look at it. It's very much like what's happening this month and why is it bullish or bearish. He had a few little hiccups along the way saying, oh, this is going to be really bad. And then the markets went higher. But most of the time it's like, here's what happened. Japanese yen carry trade, which I didn't tell you about 6 months ago, but I'm telling you now that it's already happened. And here's why it's bullish. And here's why Yellen's going to open the taps. And here's why Powell's going to pivot. And here's why he's going to cut rates. And here and here and here. And it never happens. If you're patient enough, the catalyst will come. It always does. And it's never hidden. If you have your eyes open and you're just watching the news, you're listening, they say it very clearly. If it's monetary policy, if it's the Fed, they literally tell you clearly ahead of time. You just have to listen. So, not seeing any major catalyst. There's a big difference between something being a bit stimulative and adding some liquidity. There's a big difference in that and a proper shift that allows Bitcoin to have one of its big moves. The big moves have to be driven by a belief that Bitcoin is going significantly higher. You do not really have that here, right? As crypto traders and crypto investors, we all think, yeah, Bitcoin 200k easy, 500k easy, $1 million easy. Yeah, it's going there. Michael Saylor says his bearish case is 3 million. Sure, over our lifetime. But what about the next 6 months? I think you have to really understand how much time this needs to consolidate, which it's doing. As long as it avoids breaking down, this is all good once we get above 70, right? It had a massive run and it needs to cool off. So far, that's what it's doing, right? I would still lean more towards this low not breaking, unless we see, of course, price losing 53. That would be a big red flag initially. But as long as it stays in this area, and it could stay here, look, it's took 5 months to do this part. It could do another 5 months to build back up. But if it does, then you've had a massive run up, and you've had like a 5 to 10 month consolidation at the highs. And when you break 70, then you've a massive base, a huge amount of consolidation, which would be accumulation if it breaks out, that is going to allow price to go higher. That's great. And that's probably that is the other way to do it, right? April 23 to October 23. So from April, we consolidated sideways. That allowed the market to build up energy, accumulation to happen, so the breakout could be significant. So now we're in one of these lengthy, hopefully, reaccumulation phases that allows the market to break out after. Then it could do that even without a catalyst. It could have a decent breakout because there's enough accumulation going on. But there has to be a reason. Investors, high time frame players, need to be buying here, not selling. Right? That's what the accumulation would be. If the supply-demand balance tips in favor of bulls and the bigger players have been accumulating here, not selling, then you can see a bigger breakout. That will come with a catalyst at some point. And the catalyst isn't here yet. Right? The election could be part of it, especially if Trump wins. There are little things that can be part of it. Yellen running down the Treasury general account, sure, that can help. But it really needs a significant pivot. Rate cuts can start that, right? If rate cuts begin and then they cut and cut and cut and cut for the next 18 months or 12 months or whatever, and you start to see, the Fed not doing QT, which is reducing their balance sheet, actually starting to increase it again by adding money, by stimulating. And that's where Trump probably would have the biggest impact, because Trump has said, I want to be intervening. I want to tell the Fed what to do. Harris is not that at all. So when you talk about these big shifts, they take a lot of time and they're very, very clear when they happen. And everything in between, like all of that, everything I'm talking about has got nothing to do with this. Bitcoin going from 62 to 59, 58 to 61 to 58. That's low time frame noise. That's great for low time frame trading, and still, as it has been for the past several weeks, lower time frame trades are the ones getting rewarded. And if you look at your own, if you're a hybrid trader, if you trade short and long term, I trade day trades, scalps, swing trades, and any of the lower time frame stuff is still the most profitable. It's still the moves that are rewarded the most, where it's get in but get out. Right? Don't hold the shorts expecting zero. If you sell on this move, you should be taking profit at support. You know, if you sell this one yesterday, you should be taking profit after the impulse, all that kind of stuff. And eventually that will end, and swing trades will become, you know, the more profitable angle, whether it's up or down. But for now, it's a low time frame rotational market, and it's like a market that's seen pretty clearly. It's a market waiting for a catalyst. So we just wait patiently. And that's it. GM. Today we'll do altcoin requests, 4 p.m. UTC. Be there. GM, GM, GM.